Welcome everyone, and thank you for joining the 5 Pillars of Tax Savings for Self-Employed webinar. My name is Uri Bar Joseph, and I will be your moderator today. We have a great webinar planned, but before we start, a few housekeeping notes. First, this webinar is being recorded. A link to the recording will be sent to you by tomorrow, probably a little bit before that if we can get everything ready. Along with the presentation, with a PDF of the presentation and a link to the recorded webinar. We have a special offer for our webinar attendees today. For the first 5 who will sign up after the webinar with formations, we offer to prepare and file your 2019 personal tax returns for free. I'm going to mention that during the webinar as well. We have people managing the chat and the Q&A module, so please feel free to use those to submit questions or make any comments. We ask that if you have a question, you use the Q&A module, not the chat. If you need some assistance, that you use the chat. The Q&A is better suited to manage the questions throughout the webinar, and we're going to try and do our best to address all the questions that we're going to get throughout the webinar. There's a Q&A portion of the webinar at the end of the webinar, but from past experience, we're also going to try and answer questions as they come in. And I'm going to try to sift through the questions and bring them up to Shahar as we go along. As I mentioned at the end of the presentation, we will hold an open Q&A. You can submit your question at any point, and we will do our best to get to all the questions. If we are unable to get to your question, we will post answers to all the questions on our blog after the webinar, and they will be included in the follow-up email that you will receive. After the webinar, you will be sent to a short survey about the webinar. We would love to get your feedback so we can improve our webinars. And with that, I'm going to move over to review a little bit of our agenda today. So today we will cover the 5 pillars of tax savings for self-employed. The COVID-19 version. As such, we adjusted the content to bring up tips and ideas of things that you can do today to take advantage of both the CARES Act and other relief programs that are available for self-employed. Shahar will mention those throughout the webinar. And since I mentioned Shahar's name so many times by now, then our speaker is Shahar Pliner. You can see him on your screen, the founder and CEO of Formations. Shahar is a tax and accounting expert with over 15 years of experience in the field. He's managed thousands of clients' tax returns, business structures, and S-Corps. Before he founded Formations, he built a successful tax and accounting practice in Seattle, serving over 3,500 customers. I've gotten a question about if we can see Shahar. If you can see Shahar, that's fine, as long as you can see the presentation. We can send you will see a picture of him in a minute. If you can see Shahar's video, that's great.
You didn't miss anything in a way. Yeah.
Okay. And with that, before I hand it over to Shahar, I'd like to kick off the poll that we have prepared for you. These are going to be the questions. I'm going to start it now. You should see it coming up on your screen, and I'm going to give you about a minute to 2 minutes to complete the poll. There are only 3 questions, which will help us learn a little bit more about who joined us today and kind of the distribution of tax structures, employee and business income. And this way, Shahar will be able to modify some of the content to the audience that have joined us today. I'm going to give it a few more seconds because I see that people are still going through this. So maybe 30 seconds, and then we're going to end the poll and share the results. Okay, I'm going to end the poll now. And actually, the last few has come in just as I was about to end the poll. So good for you for the last few. So I'm going to end the poll right now. And I am going to share the results. We see actually a fair amount of S Corps today on our webinar, which is a good sign. We love seeing S Corps, mostly self-employed, no employees, in a more than what we usually see in terms of business income. Shahal, do you want to leave the results on the screen? Do you want us to take them off?
Yeah, no, I'm good. It's a good pulse for us. So
okay, perfect. So I'm going to close the poll right now, and without further ado, I'm going to hand it over to Shahal.
Amazing. Thank you so much, Uri. I'm excited to be here today because in a way we are going back to our normal schedule. The last couple of weeks we've been super distracted in a good way with the CARES Act and the PPP and the idle, which was, in my opinion, it was a good program and in a way great success for many of our clients. We saw people really engaged with the PPP and the idle and things that the government is trying to do for the self-employed. So we will touch, as Uri mentioned earlier, kind of the nuances of the new kind of the new reality with COVID-19, both with the IRS, how the IRS see self-employed and taxes at the moment, and what you as business owners can do to gain more confidence, come back to your own kind of groove of business and use the system to improve. Again, taxes, cash flow, savings. We will cover great topics in the next, 40 minutes. So I'm Shachar Pliner. I'm Israeli. I was born in Tel Aviv, moved to Seattle about, 15 years ago. As someone said that you cannot see me, I'm a bald by design. I own a couple of S Corps. I'm not a CPA. I'm a tax guru. I'm an entrepreneur. I see the tax code and the tax structure and how self-employed can optimize and efficient their business operation via different lenses of just the compliance of the CPA. We build structure, we manage thousands of S Corp, and in the next 30 minutes, we will give you tips how to really save money. And if you follow my guideline, next, I promised you that this formula, will come back to this formula at the end, but this is something that I really want you, audience, to embrace. This is really the key of the presentation today. If you follow my guideline, or you get basically what allow you, from the government, you'll be able to save thousands of dollars on your self-employment journey and keep more money in your pocket. This is, by the way, like an estimate based on $125,000 of income. So I saw in the poll that we have a large audience that make between 50 to 100. There are some that making a little bit more. Keep in mind that it's in proportion to your income. If you make between 80 to 100, this can be a few $1,000s less, but in general, we will walk you step by step, both on tax and benefit and health and some structure, how to get into this tax savings. So I'll come back to this formula at the end, but what kind of, trigger me kind of to go in front of you and just because I really want to break this status quo. The status quo is what basically put you guys, between me, my philosophy, and the tax savings, and actually you getting into the actual result. So I just put some quotes, that for the years, this is what we hear a lot from people. I cannot control my tax. What do you mean I cannot control my tax? Of course I can control my tax. Taxes is what we call is the largest expense of the business, which is not managed. we can help you manage it. And with the few very simple tactics, we'll show you how you can definitely take ownership on your taxes and control it. The only thing in life and guaranteed is death and taxes. Not being involved will reduce my chances to get audit. The optimistic system, the capitalistic system, kind of, you have to pay. Again, you have to pay your fair share. You don't need to be afraid of the IRS. IRS is the same kind of agency or entity that you interact. In my opinion, it's almost like Facebook. Both of them are scary the same. You spend money on Facebook, you spend money on the IRS. With Facebook, you think that you'll get some money back. There is a way how not to bleed money to the IRS if you know how the system is working. I'll get audited. If you don't want to get audited, move to an S corporation. S corporation has lower chances, 4,000% to get less audited. It makes my head hurts just by thinking about it. So give it to someone else to do it for you. Delegate. My accountant is dealing with that. The fact that your accountant is dealing with that doesn't mean that you don't need to be educated at least how the system works, because we know that your accountant has 100 or 200 or 1,000 people like you. So to give the same attention as you can give to your own business is not the same way. So by educating a little bit more and being involved a little bit more, kind of your time in the business, but actually make the right decisions. And this is kind of what this webinar about today, is to make the right decisions, is to let kind of the noise and the distraction on the web or from your friends or colleagues go away, and just focus on today's time, what's the best for your business. And there is no question that S corporation is the best entity structure, is such an amazing enabler, and we'll walk through step by step why S corporation is such a great deal. Now, one more note before we start is that we see a lot of business owners got into this, financial coma, we call it. COVID, hit us pretty severe. The months of March and April was pretty kind of, a methodic pause for life. Some businesses got really, stop revenue. And I think that this is a great time kind of to stop for a second and look inside your business and really take care of the fundamentals and the foundations of the business, and with some baby steps. And I'll walk you right now, kind of, the next 20 minutes, baby steps, how you can make really an impact, a ding in your business for the good, and save more money, really keep money in your pocket, so you can actually recognize 2020 as the year of change, the year that you actually embrace the change and move into the S corporation structure to start your business journey. So when we talk about tax planning, again, there's a couple of points that we want to mention. One, is that there's few areas, and if you go back to my slide about the $19,000 tax savings, there's few areas that you need to focus, and there's only few. So if you break it into the three, one of them is just a task. Once you do it, that's it. It's done. You don't need to come back to that. And this is kind of forming the single member LLC. And if you're in the state of Washington, you're in the state of California, it's a state entity, limited liability protection, and we'll show in a bit later what's the really advantages of being an LLC, filing as an S corporation. So once you do it, this is a task. It's a one-time registration, cost in average, $200-300, depends on the services that you're using, and that's it. You have an entity beyond your business at the back office that support all of the needs. And this is, again, it's a task, it's a one-time. Then to calculate your business expenses, again, in 2020, super easy. There's so many options as a cloud computing and cloud accounting software. You can use Xero, and you can use QBO, and you can use some other, automation of software that can connect directly into your bank account and credit card and help you basically to recognize and categorize and reconcile your business expenses. And the last one is the one that we kind of care in a way the most, because this is where we feel that the W2 industry, the corporate American, the one that went and worked for Microsoft and Google and Amazon, they get all of these very easy pick of benefits, the 401k, the HSA, the FSA, the student loan repayments, the pet health insurance, life insurance, disability insurance. So the news is that all of those benefits are actually eligible for each and one of you the same. And actually, to tell you, it's even better for you because you can choose, because you're the only employee of your business, you can choose the terms, you can choose the frequency, you can choose kind of the cadence, you can control how much do you spend on 401k, how much money you put in HSA. You can think about the investment mechanism, how is your 401k is invested. So the idea is to let go kind of the old way of doing business, the SEP IRA or the non-contribution into healthcare, or not even being covered by health insurance. There are great programs out there which self-employed should utilize. And if you mix basically those three things, you'll get a significant tax savings. So since we're in COVID time, and since we are in discussion that also help you to understand what's changed at the moment with the IRS or what the government allow you to do. So again, single member LLC with an S election, we can file what we call late S election. If you file late S election, you can file the S corporation status for 2019. There is a way how to make you compliant on the S filing and how to do like 1120S, which is the tax return, and also how to minimize the exposure to self-employment tax, but also keep you compliant by pay some self-employment taxes to the IRS. And what we love the most about S Corps and the CARES Act, we see that people that filed for the CARES Act, for the PPP and the IDLE, if they've been an S corporation, they got few advantages. One, they got into the system originally, 1 week before, the system was open April 3rd, and then self-employed could join the program only on April 10th. So they got a week, and we all know that it was first come, first serve. So people that been on an S corporation could get the money faster, but also about the debt forgiveness. Although that there is no clear guideline at the moment from the government, and there is kind of debating at the moment between the IRS. IRS want the forgiveness to be taxable. The government think that the PPP should be a tax-free. So we see some fighting at the moment between the IRS and the government about how to deduct and how to forgive the debt. S corporation will be able to write off the debt in a more easy way because S corporation owners run payroll. So the tax savings, it's something that we really kind of cares about. So I'll stop for a second, just, Uri, if we have questions specifically before we get into these major two expenses. And yeah, you can put it on the screen because we'll touch kind of the main two things that we believe are a missed. But before we touch these two missed, I just want to make sure if there's any other questions about tax savings.
So we've had a few questions about S Corp and the point about the chances of audit and why S Corp is such a better structure to ensure less chances of getting audited. If you can speak about that a little bit, and that would answer some of the questions that we've had, and then I will go through other questions that we've gotten so far.
So there's two main reasons. One, because think about it, what's going on when you do an S corporation? You basically send the IRS two tax returns. You send a tax return which is individually, which has your personal stuff, your deduction, your mortgage, your interest, your dividends, your capital gains, if you have a rental property, and it takes the business operation and send it into a separate tax return. So although now I have two tax returns in the system, by default, I reduces what we call the DIF score. Each tax return is getting a score by the IRS about, how risky, based on the forms that you're using. Schedule C, it's a very risky form, get high score to get chances to an audit, while S corporation, or what we call the Schedule E page 2, is way less. And think about what happened when you're an S corporation. When you're an S corporation, you're sending your tax return into the business system, and now you basically compete on an audit with businesses that are way, way bigger, large, and making more money than you. While where you're Schedule C, you're actually competing with businesses that make way, way less than you. So if we just say that the IRS is picking up, tax return for an audit just based on income, just by having that, S corporation is way less. And again, going to the question, statistically, they're saying it's like 4,000% less audited to be S corp than a Schedule C.
The other question is, thank you, Shachar. The other question was about business expenses in general. The question is, we thought that business expenses are business expenses. How can I plan or optimize for business expenses? Can you talk a little bit more about that? And then maybe it's also a setup for this slide to speak about how can you optimize business expenses?
So this is good examples, by the way, good question. So one thing that we see is that people just don't take all of their business expenses. They miss it. They don't connect, accounting software into their banking, and by trying to do the expenses on an Excel or just going retroactively a year back to January of 2019 and try to reconcile their personal account because they're commingling funds, they just miss the things because it's been long time ago. So to record the expenses via an accounting software, again, will save you a lot of time and money. Second, the two major expenses that we see a lot of kind of scrutiny around or resistant is the home office and the mileage versus actual. Home office, if you're working from home, you're allowed to take home office expenses, and it's not a red flag. You need to do it, the right way. You need to do it kind of, with thought, but there is expenses you can take for the sake of you working from home. And then if you're waking up in the morning and you're walking to your home office, this is your only commute, because now from your home office, commuting into your actual office, if you're a real estate agent or financial advisor or a freelance that has some share space, now your mileage can be, and your auto expense can be deducted as well. Now, think about it that miles, and again, this is kind of interesting discussion around COVID, just because people are not driving much in the last couple of months, but in every given year, because gas prices relatively low, the actual receipt is way less than what is the mileage rate, the 57.5 cents per mile, giving usually an auto expense 3 to 4 times more in the deduction. So if you're in a 25% tax rate, if you have 4 times the deduction, this is, a lot of money that can be saved. So again, knowing which expense to take or how to track your mileage using MileIQ or using a log or using, different software will just take the burden from you to remember it. We'll do it at the back of your business operation, and I'm guarantee you that you'll do 10 times better than how would you do it. The next topic.
Maybe a last question before we move on to the next topic is going back to the benefits section in the previous slide. Can you explain a little bit how that helps with, again, increasing the tax savings?
So we know that the IRS is allow you to defer some of your income based on some retirement mechanism or saving tools, so 401k, for instance, allow you to put 19,500 into a deferred plan. Now, you don't in a Schedule C situation, you need to make like a lot of money, on the net income to get into those high level of contribution. While in an S corporation, because you're an employee of the business, again, you can deduct easily $19,500 from a $20,000 pay stub. So to 401k is one example, how you can defer about $20,000. And again, and if you're in a 25% tax break, send money to the future, can save you $4,000 or $5,000 easy. Same for HSA, which is the health savings account, which allow you to put $7,000 a year for out-of-pocket medical expenses. It's the only plan that allow you to do so. Plus the FSA, which is the flexible spending account. The flexible spending account can be break into two. $5,000 can go and pay for childcare, private school, pre-after activities, summer camps for, self-employed that has kids younger than 13. And the other plan for FSA, 2,500, can go into vision and dental. So if someone has some other medical expenses, all of those are pre-tax. So if you take the $20,000, ish, on 401k and add the FSA and HSA, you get to close to $20,000 in tax deferred / tax free mechanism. $20,000 in 25 or 30% tax. This is $5,000-6,000, of tax savings. This is huge saving for the self-employed. This is real money stay in your pocket, which you can use for, again, for expenses or for take-home distribution to do some fun stuff.
Awesome. We will keep going because we're now starting to push against the time. So next topic.
All right. So cash is king. This is not cliche. And we know that if we can keep, more money in your pocket, it's actually worth, a lot of, it's also the discussion about cash flow. It's also the what you call the financial distress. When people have more money in their bank account, or they feel that they can control, the cash flow, it's reduced a lot of the stress. So show me your wallet is, again, tax payments. Know how much to pay the IRS and when. We see cases where people have $70,000 refund at the end of the year. Means that because of their panic, they just overpaid the IRS with the fear that there will be not enough. So $70,000 refund coming now in May after almost a year and 5 months sitting with the IRS. What could you do with a $70,000 sitting maybe in the stock market or the bond market or just in savings or in your college funds as of January of 2019? This is a lot of money that you can make money. The idea about cash flow is the power of compounding, how we can start investing really early at the beginning of the year in places that will make you more money during the year without just bleeding it into the IRS system or into the Social Security system. This is why S Corporation is such a great enabler, because S Corp, again, think S Corporation, it's an entity, it's not a person. So S Corp is not paying Social Security. You, as an employee of the corporation, is paying Social Security. Therefore, payroll is such a great mechanism for control your cash flow, get a steady pay stub, and if you don't have a steady income every month, you can take payroll every quarter, which is totally fine, but at least every quarter, you get some money paid to Social Security, controlled. You have some money paid to the IRS as a federal. If you're working in a state tax state, you pay some California or New York or Massachusetts, state tax. So it keeps you more aligned in the system and compliant. It allows you to fund retirement from the beginning of the year. We see a lot of SEP filers or 401k filers that has, retirement plan, fund the retirement kind of, at the end of the year, taking all the way to October 15 or September 15, or with 401k, sometimes the last month of December. Think about it, I'm not talking about investment at the moment because the stock market is pretty crazy those days, but we had a phenomenal April, or the beginning of the year, January was great. traditionally, if you put money early in the year in retirement, one, you make your obligation, you kind of, take it off your shoulders that you're not setting aside money. And second, this money can start working for you. The benefit of cash flow of 2019 taxes, or actually in 2020, is enormous. The IRS made some huge announcement about one. We all know tax deadline, July 15th. So prepare your taxes, as soon as possible. But if you owe money, don't pay a day before July 14th. Keep the cash flow. If you have the money, just pay it, forget about it. So but another way how to keep cash flow for the next 2.5 months, take advantage of the IRS relief options. IRS just announced that self-employment taxes and FICA taxes, like the self-employed, the Social Security and Medicare for 2020, can be paid in 2021, some in 2022, which means it give you this 7.65% or 15.3, both sides of the coin, 15% of the wage to defer the taxes for 2021. And distributions, again, plan the distribution. Distribution is what money goes into the business, can get out into your personal account, so you can actually leave and pay your personal expenses. On that note, because we kind of in this methodic pause, and because there was a feeling in the last 10 years the economy was growing like so fast that people just expense for the reason of the expense, and I think that the last couple of months kind of taught us that we can live with a little bit less. So plans your needs and wants. Again, just make sure that you have enough, to keep the lights on, and if there is a need to expense, just make a budget. Just look inside your business and build your home budget, and make sure that you spend a little bit less, be a little bit more cash flow kind of smart, build this cushion, and then focus on the front of the business for sales. Cash flow, it's an interesting topic, but if you have questions we can address. Cash flow it's a little bit more kind of holistic approach. How people treat money. Compliance is very kind of black and white. S corporation documents, if you get into the S corporation structure, make sure that you maintain all of your documents, the article of incorporation, keep yourself like a folder with your EIN number, with your W-9s, with your W-4s, with your contract to your real estate agency, with your vendors, with your clients. Again, make sure that there is something there to document your business activity. If you're living in a state tax, even in Washington, there is a state exposure. So be aware if you're sales taxable, or if you need to pay the B&O, or if there is a requirement to pay to your city of Bellevue, city of Kirkland, city of Redmond. If you do business in outside King County, if you do, just make sure that you know which taxes you need to pay. Pay timely. We see that close to 50% of self-employed are behind. There's no reason to be behind. So it's too easy, to be compliant. It's just, again, it's the mental blocker. Sometimes people get into the one time behind, and then they're playing kind of, I'll put my head in the sand and I'll forget about it. It maybe disappear. It won't. So the same, I'm going back to my Facebook example. The same as the first time put ads on Facebook or on LinkedIn, or interact with platforms like Upwork and Fiverr, looks a little bit intimidating. And then you actually made the effort to do it because you drive yourself for the sales stuff. Same here, deal with your taxes just a little bit, push yourself just to the next, level, and you'll see that, things will come your way in a better way. Like, don't commingling expenses. Like, there's no reason. Put two separate accounts. What do you need? Like, one credit card for your personal, one credit card for your business, and just separate it. And what is a business expense? Start with the one that are really, really, really business expense. And then if you have any doubt about expenses that are not business, run it via the business. Worse, take it out later. But keep your books hygiene in a high level. Again, there are software that can do so much of that for you today, and we see people basically struggle with Excel and receipts and paperwork and boxes full of paper. And 2020, I can tell you that, I'm running two businesses and with employees and receipt and whatever. Both businesses are paperless, all cloud. Nothing is moved between people on a paper. Everything is documented. If I can do it at scale and at large, you can do it for yourself. It will save you so much money. I think that there is probably some questions around.
So, Shah, there was a late question about the payroll part, especially since some of the audience is not in S Corp yet, but that might be a good setup for the next slide. Can you explain a little bit more about the concept of payroll if I'm self-employed?
Sure. So if you're a self-employed, Schedule C, sole prop, or even a single member LLC, as a member of your own organization, you're not considered to be an employee. And therefore, as an employee, you're not allowed to take a W-2 wage as a sole prop or a single member LLC, which means that the income that you bring to the business minus your expenses will be taxed at the net level, both federal tax and self-employment tax. Self-employment taxes, it's an additional 15.3%. It's a lot of money. So in an S corporation, because S corporation is not subject to self-employment taxes, you save the whole 15.3% of tax. Now, of course, there's give and takes. So IRS will not allow you to go 100% with no self-employment taxes. So the mechanism to push self-employed of FICA or Social Security and Medicare into the system is by issuing a payroll, a pay stub. And literally, it's become an employee of yourself. It's again the same as any employer will employ you. Will go and you fill out a W-4 and you'll put your exemptions and your deductions and then you run the actually pay stubs. This is what S Corporation is doing for you. You run a payroll on a monthly or a quarterly basis, so you can be self-employed compliant and push federal tax into the system. But now it's in a control, monitor way. It's not basically just a tax on the bottom line. And as you can see, the stages are super easy. You incorporated the LLC, and we already discussed about it. It's a one-time task. Just incorporate the single member LLC, file form 2553, it's an S selection, and that's it. And it's a magical touch, you become an S Corp. Now, because you have a separate entity, you're required to open a separate business bank account. You can go to Chase, you can go to Bank of America, you can go to local banks like Columbia or Banner, and we see a huge advantage to work with local banks. For instance, the CARES Act, the PPP, we saw that personal banking relationship with local bank like Seattle Bank or Columbia Bank or Banner, gave those self-employed first in line to the PPP because of the relationship, because the banker knows them and helped them to fill out the form and was very proactive about getting the documents and file with the SBA as soon as possible. So again, personal banking is really important. Keep in mind that in 2020, we have lots of options for what we call online banking, internet banks with no physical branch, which allow you actually to open the bank account over the net. You don't need to go physically to a branch. Banks like Relay, banks like Aslo, we know of SoFi on the personal level that working on some business solution. So once you open the banks, you can connect them automatically into accounting system like Xero. Xero, it's a great, easy software, very cheap on a monthly basis. And then you define your reasonable wage. Reasonable wage, it's a formula. It's based on your income. It's based on your geographic location. It's based on occupation. And then when you do that, that's it. You have a pay stub for the rest of the year running at the back of your office, and just, taking the whole stress of the need to pay estimated tax payments and just think about it. So again, you can create today a system that will take all of this hassle from you. And as you can see, we just define it here, on the slide in a very easy couple of steps. When income or revenue is getting into your bank account, first, you basically take care of your expenses because this is tax-free. Your meals, your entertainment, your advertising, your mileage, your business use of home, your continuous education, your insurance, your interest that you're paying on business credit card and loans, and name it. Then you define your payroll, which is, again, it's taxable, but it's necessary. This is the enabler for this amazing retirement plan and tax savings mechanism. So although payroll is taxable, it's enabling you to more tax savings. So overall payroll, it's a great thing to do. And then the benefits, we spoke about the benefits. Some of the benefits are tax free. Some of them are tax deferred. This is the 401k, the HSA, the FSA, life insurance, disability insurance, and the distribution, which the distribution is the coolest part of an S corporation. This is money that you can actually take out of the business and you don't need to pay self-employment taxes on. This is a FICA-free, distribution, which actually at the end of the day, make your take-home money higher. We guarantee you that if you follow those 4 very easy steps, you will keep way more of your hard-earned money in your pocket.
Shahar, there was a few questions on this slide that came in. The first one is there an income bracket you need to be in where it makes sense to set up an S Corp, meaning do you start seeing the value from a specific income range, or is it true for everyone?
Yeah, it's a great question. So one, it's true for everyone. Now, if it makes sense financially because there is some cost, yes. So one, S corporation will save money to everyone, even if you make $10,000. If it makes sense for someone that makes $10,000 to do an S corporation, only if you see a path that next year will make 60, 80, or 100. Yes, so it's easier to start early to get used to the idea, and then make it work when you actually make a lot of money. But when we kind of define the threshold, usually it's in the $60, $70, $80,000 of net income. Someone is making 100, has about 20,000 of expenses, get about 80, 75,000 of net income. If we can save about 15% on 60, 70, 80,000, this is where you can start seeing the 10, 11, 20, $12,000 in tax savings. So, if we need to put a number, put it on the 60 or in the $70,000 threshold. But again, if you're making 100, Jennifer, or 150,000, this is a no-brainer. This is where you can see the really high tens, of dollars, thousands of dollars, basically in your pocket in a safe. So it's a great question. Thank you.
Okay, I'm going to push forward because I don't want us to run out of time. We're going to address the other questions in the Q&A. So we're going to keep going. Please use the Q&A module or the chat to submit more questions so we can get to them later. I'm going to move us to the next slide now.
So again, I think that this is what I'm saying. This webinar, it's way more technical than the one that we have a couple of weeks ago about the CARES Act. So again, if you have questions, feel free. The best loophole, and we can move on, it's planning. Again, if you know what you're doing and you kind of catch it up before it happens or in the same year, it's way easy to adjust then the following year. Investment and retirement, we spoke about it, 401k, HSA, FSA, couple of things that we see for people that makes even a little bit more. If you have kids older than 15, 16, 17, paying kids can be a great mechanism, to save tax. It will be an expense for the business. The kids are still not in the bracket to pick it up, as an income. So again, there is a discussion about paying kids. And for those of you that are making, above the 200 $250,000 as a self-employed, you should know the defined benefit plan and the cash balance plan. This is what we call the 401k on steroids. This is plans that allow you to put money for retirement in the hundreds of thousands of dollars every year and just catch up on retirement faster. So again, there is a solution for every income bracket.
I should mention here really quickly before I move us to the next slide that in a few weeks we're going to have a webinar dedicated to talk about financial planning, investment, retirement with another expert on the webinar. So just a note on that, and I'm going to move us to the next part here.
Now, estate planning is really important. We just want everybody to be aware that there is a state tax in the United States, both in Washington, California, and on the federal level. Federal level at the moment, it's about $11 million per person. Each state has different. But again, what we work with business owners is not just on the tax side, it's also on the succession plan. What is your succession plan? How do you going to basically give this wealth that you just build to the next generation, if it's your actual business, all of the retirement plan into the next generation with very little tax exposure, or it's tax-free. So again, estate planning, not the key and the most important thing, but again, keep it at the back of your head just to make sure that you address it if there is a need for a will or for a trust or special need person in the house. Again, this mechanism can protect you for the long term as a business owner. Really, really important to take care of it. We spoke briefly about the CARES Act, the PPP, and the EIDL, the economic disaster loans. Those plans kind of at the end of the run rate. In a way, the money is probably already allocated. We don't know if another plan will come soon. Our clients, many of them got the PPP. The EIDL, you can apply. The EIDL you should apply via the SBA website. The PPP, again, this is the bank that you need to go through. I think that because there is a cap, to all of those programs, the one that are more clean and ready and have their documents, will be first serve. So we encourage people now, take the time, clean your financials, file your 2019 taxes. And of course, there are some other plans available. There's some debt relief programs, and you can get some unemployment assistance. And the SBA is open for some bridge loans, $25,000 regardless. The IRS made some relief of how people can take money out of 401k and retirement plan. They waive the 10% penalty for early withdrawals, and they allow you to pay back with no tax consequences in 3 years period. So there's many ways at the moment to keep the business alive. You just know that the world out there exists, and make the decision what's the best kind of sequence for you. Payroll with a 401k and an HSA and a PPP, or maybe it's a IDA loan with some Schedule C and a SEP IRA, and again, knows what's the best for you, and make sure that you get those mechanism of structure and tax savings and benefit and health insurance that can help you basically to get into this $20,000 formula.
This is a great opportunity to segue into introducing formations who can help you with all this. Shah, we got a lot of questions, so I'm going to let you do the introduction to formations as I work through the questions, and then we're going to get to the Q&A section, and we're going to try and address all the questions that we got. If you have more questions, please submit them now through the Q&A module so we can get to all of them. So
let's do it quick. The idea basically for formations is, as being as an insider, in the tax industry, you can go next, and basically know the industry ins and out. We covered the S corporation, formation stage, single member LLC into an S. I think that what I learned is that if I can introduce people into the concept, but also actually take the burden and do it for them. I think this is the power of formation. So formations can provide you everything that we just spoke. If it's, the tax savings and the bookkeeping and the payroll and the advice and the access to professionals and education. So we basically gather everything under one platform. Once you basically on board and be part of the platform of formations, you can enjoy these tax savings. This is just an example that we ran, on $125,000 individual person make 125,000. When he need to pay his taxes as a Schedule C, he will pay $33,000 in tax. If he file as an S corporation, there's about $12,000, of tax savings. Add to that, the more efficient 401k and the HSA and the group health insurance that is so unique and hard to find, but there are solutions there. This is where you get into the $19,000 tax saving, and our guarantee for you is basically that we'll do everything for you. You don't need to run your bookkeeping. You don't need to run your payroll. You don't even need to think basically about your taxes. Upload and onboard your information into our platform, and we will take care of you, and we'll just let you basically free to do your business and whatever you actually best of. And Uri mentioned at the beginning, we are tax people, we are tax gurus. This is what we do for life. We're passionate about taxes, as you can see, which is weird, but this is us. We're passionate about tax and finance. And the first 5 people that will join formations today into our service and start, the journey with us and never look back around your financials. I personally will do your 2019 tax return. Whatever complications you bring my way, I can navigate it. So again, if you're self-employed and you feel that formations is for you, join today to our service. I will do your 2019 taxes for free. And again, open for questions. And I really, really, really appreciate all of you staying, for the last 55 minutes.
So you spoke about complications. So I have a few of them coming your way in the form of questions that we've gotten. So I'm going to start firing them away. So the first one is, as a real estate agent, the commission I receive is on my name and not my company name. How do I show it in my business income? So how would S Corp help me move the commission to my name?
So it's just a technical W-9 question. Again, you go to your broker and you just change the W-9 from your own name to the name of the business and the EIN number. So open up irs.gov and search on the form W-9. It's an easy form with maybe 5 fields: the name of the business, the EIN, the address, signature, and date. The second that you'll give it to your employer will start issuing the 1099 income on the name of the business. Provide your employer basically also the business bank account, direct deposit information, or if he gives you a check, just issue a check on the name of the business. And now everything is funneling into the business bank account. Super easy.
The next question is, as a real estate agent, we have a lot of real estate agents on the call today, which is great. How does real estate investing helps me save taxes if I already have some rental properties, specifically in Washington State, if that matters?
So this is not kind of the topic of the discussion. So investment, it's a separate, topic. I'm more than happy to chat about real estate investment. It's one of my passions. One of the things that we advise people is not to put any investment property into the S Corp. S Corporation, it's an entity that runs ordinary income. Real estate is a passive or income which is not subject to self-employment tax regardless. We don't want to mix the liability. We don't want you to sell real estate and basically be exposed to some lawsuit, whatever, and then someone going after you and going after your investment property. So investment property should be in a separate Schedule E or on a single member LLC. Your real estate activity as a commission should run via your S Corporation. S Corporation, it's ordinary income. Real estate investment is passive income. But regardless, real estate investment has great it's a great investment. Probably your rent will be tax-free forever because of depreciation and mortgage and interest and other expenses. But again, this is a side way of the discussion today. In general, our recommendation for self-employed, separate those two activities in two different entities. It's a great element for savings. And if you want to chat a little bit more about how to make real estate investment instead of your 401k as an investment mechanism, great question, amazing idea. Happy to pursue it, in a separate chat.
Is that also true for taxes, for investment in the stock market? I'm sorry, in stock market, not taxes.
Again, your 401k is in the market. Your SEP IRA is in the market. So our idea is that if you invest in the stock market, why to invest in what we call after-tax, accounts? So if you can go through, a before-tax account, now you basically, or pre-tax, now you get both. Again, assuming the market is continuing to appreciate, you get the appreciation of the market, and then you get also the tax savings. Keep in mind that all of these pre-tax plans will be taxed in the future. So we are planning for what we call tax holiday, a year where you either take, a year off, or either when you basically income, for instance, like 2020 is going probably the wrong way, to start taking money out of 401ks and maybe convert into a Roth. So there is a lot of discussion around investment, but overall, again, pre-tax investment account gain you both the appreciation and the tax savings, and there is a way how to get the money out with very little tax to no tax. Again, conversion to Roth and other mechanism.
I'm going to try to squeeze in one last question. It's specifically, it is specifically about the CARES Act. Can I apply for the PPP or EIDL if I have not been affected yet by the crisis? I have rental properties, but my tenants are still paying the rent. So can you talk a little bit about the difference between PPP and the EIDL grant? I will also mention that we have a bunch of previous webinars recorded that address most of these questions, but I'm going to let Shah answer this last question before we conclude.
Yeah, so this will be the last one, and then we'll say goodbye. And I really thank you all for joining us. Keep in mind that these webinars are very technical. We try to go into the details, not to save from you any information, but on the other end, we try to keep it as simple as possible. Although this topic is, it's complicated, it's taxes. But one, we advise people to file PPP and EIDL together, regardless if you need it, yes or not. Why? Because it's first come, first serve, and you don't know if in the next couple of months your tenant will stop paying you and you'll get into a really hardship of situation in your business. Which means if you're eligible for PPP and EIDL, and you should, because it's 500 people in your business and less, and if it's just you, another person, you're probably eligible. File for the PPP. File for the EIDL. Make sure that you get your forms in the queue. If you get the money later, again, then we can decide if we use it, yes or not. You can always pay it back. If you don't need it, you can always put it on the books as a loan and write it off for longer time, or basically amortize it over life of the loan. Or you can actually use it if something actually comes and hit your business in a way that you don't see today. So apply for both and get it, and then decide later what to do with the money.
Awesome. Shah, first of all, thank you so much for your time, for your, as usual, enthusiasm. Everyone else, thank you so much for your time. We know that spending an hour with us, we should not take it for granted, and we appreciate it. We will follow up with an email with a link to the recording and the deck. In the deck, you will find links to some of the information that we mentioned today, to a landing page to submit your request for the tax returns, and a link to our next webinar, which will be next week. In addition to that, if you're interested in more advice, if you want to talk to Shah specifically, I'm going to throw it out there right now. Please reach out to us either through our website or through teams@formationscorp.com, and we will try to address all your questions. As you leave the webinar today, we ask that you fill out a short survey that will help us make these webinars better for the future. Once again, thank you so much for your time, and have a great rest of your day.
Thank you. Stay safe all.